Hello everyone and welcome back to the channel. Gains, how to win trading 80% of the time. This is going to be a really good video. I've got some comments down below, people saying, oh, you're wrong. I was looking for the price to fill the gap. But if you listen to my videos, maybe I don't mention it enough, but when I trade, I leave my biases at the door. I have targets, but I don't care if we get there or not because I trade the day. It's setups that we see during the day, maybe 2 days, 3 days max, and we definitely don't hold overnight during earnings. So we don't care. That's how you manage risk. This is part of risk management. If you want to learn more about it, you can send me an email. You can drop down a comment. I'm going to be trying to do more educational videos. People are asking me, how do you know, these dojis and these reversals, like how intraday reversals in the morning, right? I will create those videos for you. Just be patient. It just takes time, but I will have it out there for you eventually. But I really want to talk about this huge correction in Moderna. I just think this is a wicked buying opportunity. People, this is fear. And when people are fearful, you need to be greedy. So remember, this is not financial advice. This is for education and trading purposes. So yes, I could be wrong, but 80% of the time I win. And if you look back to my videos, go back. If you really want to see what I talk about probabilities, and I look at the setup. Is it this probability, that one, or that one? We wait for the open. Sometimes I'll buy right off the open. Sometimes the probabilities is buy right off the open. And I say that. I'm like, if we open $1 or $2 from the previous close, buy. I'm buying it. And I'm clear about that. Again, we always have risk management in mind as well. So let's jump into the chart. We're all here to take a look at Moderna, the chart. What is it going to do? We want to make money. How are we going to make money? Let's take a look at that. I'm sharing you what my insights are. So boom, there we have mRNA on the docket. Wow, it just got slammed. Woo-hoo, I think it felt like, what is this, 300 to 2. So that's a whopping $120 move. And this to me is a prime buying opportunity. Tomorrow, I am looking to buy this stock. We have just such another sharp move down that, again, right, we had this here in this area here, in this area here. I was saying, I'm going to be looking to buy Moderna here too, buying. We bought throughout this whole trend upwards. And I guess you could say this, bearish, flaggish pattern, right? And look, we have like a 3-wave correction where look at, like, this is almost, I should have noted this, but I didn't see this. But look at that. This was the break up candle low, and man, like, it hit it, right? If you were paying attention to this and you're studying break up candles and breakdown candles and you're setting up your orders, there, then you would have nailed the whole $30 move there. We didn't do that. What we did, I'll dive into the chart in a second here, but I want to just change this to my horizontal raise. So let's analyze this. All right, so let's get ready for some wicked setups so we can profit off of this. Going forward, we have huge gaps here. Boom, this is the low of the day right there. We also have another low of the day here. This is just rough general areas that we look the market to pull to, because like I said, you know what? I still think we're going to fill this gap up here. I absolutely think we're going to get there because we tend to do it. So even though we went in the other direction, I still think we're going to hit that 380 mark. That's just me. That's my bias, right? I'm bullish, even though that came down so far so fast. And I'm not going to stop being bullish probably into early 2022. And that is just my opinion. So now that we've established some frameworks here, right? So we have 3 important lines. Really, we're going to focus in between here. This is more of maybe like a month from now, maybe 2 months from now. We're going to be looking back up here. But to me, this is a prime buying opportunity. This is a day trading channel, right? So if you're looking at this channel and you're holding positions overnight, this is not the channel for you. We sometimes, maybe 20% of the time, we hold our position overnight in specific setups. But we do have hedging. So we do have these expert or intermediate level strategies that protect us against the market going against us for a day or two. However, we are going to focus on intraday, so we need to zoom in here, okay? And what I talked about, if you look at my earning videos, we were looking at specific setups on Moderna. We were looking at specific levels, and I said, so if we just zoom out a little bit here, I want to switch to this. So this is where I wanted the price to come to gap down. So I just want to revisit what we talked about. So we wanted the price to either gap down here, right, in this area, come into this area of support in V, or we wanted the price to gap up here and then V back down and get rejected. Those were the two setups we were looking for earnings. If it didn't do those things, it was a no trade. And so we didn't trade. We missed out on that $30 move, whatever, $60 move. That's fine. If we look at actually what happened on earnings, huge gap down, a lot of selling pressure. We had a breakdown candle, right? And it actually turned out, if you wanted to short it, right? But we didn't, because it didn't do the setups we talked about. So this was a no trade day, but you're right. You had some follow through to the downside, $9, right? Your risk is, right, closing above this breakup candle. That's always the strategy, right? We're risked 2 to 3%. So what is this? $6 would have been, so $3, yeah, so 3% would have been around $9, so that would have been, yeah, $2.97. So yeah, we would have been risking 3% here. If you go to start closing above here on a 15 half-hour hourly close, that's when you have to go and exit your position. Now, we don't put stops, right? We don't put stops in the system to automatically stop us up, because look, you have wicks. Let me just zoom out. But you have a wick here, and then you would have got stopped out, and then the trade would have continued. This is why we don't have stops in the system, because wicks like this would have got you out of the trade. You need to wait for the 15-minute candle close, 30-minute candle close, or an hourly close, right? That's a trader decide. That's for you to manage that risk. It's just giving you the framework. And you had some follow through, but it was a no trade kind of day. Didn't do our setup. Now, next day, what do we have? Another huge gap down. However, we did not want to miss out on this opportunity, even though it was down another $40. We still shorted this, because we said, hey, this time around, we don't want to miss out on it, because it's a new strategy. It's a new day, right? It's not earnings anymore. We have a different plan. A different day is a different plan. So we did short it. We got our 60 shares. It came down. We got our 1%. So I think it was like $4 or $5. So we made, our $240, $300 on that particular move. And you had so much more downside. And an intraday pivot at 1 p.m., which is like the craziest time. So in day trading, time is more important than price. And these are things that you're not going to hear anywhere else. You have people trading, it's about finding momentum stocks. It's about the VWAP or the MACD, the stochastics. And really, you can simplify it. Those are technical, but you can simplify things by understanding cycles, understanding time. But this is an interesting area where the market decided to pivot at an interesting time. So it is noted. And what do we have here? So we have two scenarios that develop, right? So we hit here. This is an area of pivot, noted. Next time we come down here, I'm going to be buying here at 210 for a double bottom. Absolutely. So could that be happening tomorrow? Yes. Can we close the gap up here tomorrow? Yes. All right. Or the day after, or by the end of the week? Yes. There's going to be volatility. Watch out for a lot of move in Moderna, because it's gone down so far so fast. You're going to see some volatility come to fill the gap or to retest that pivot. So what we hung out, so So I'm going to explain you two situations here. We hung out all day, pretty much all day. Like you could say maybe half the time, most of the day, right? The early to late afternoon, we hung out up here. And to me, if we're hanging up here at the highs of the break high candle, to me, that's a bullish signal. Okay. What I'm going to want to see tomorrow. So we're going back to the fundamentals here, right? Going back to the fundamentals of our day trading, our gap trading and short selling fundamentals. What we have is a higher open, and then we come down into the number. That is going to be a buy. And again, time is more important. It needs to happen within the 15 minutes, right? That's the fundamental rule. Within the first 15 minutes. If we open there and in 1 minute we come down, we buy it, right? We're looking for at least above, around the 250 mark, right? Higher the better, but around the 250 mark and above, you're going to get a pullback. And this is a buying area. And if we look to see, okay, well, we need to manage our risk. Let's bring up the 30-minute chart. And we can see here, we opened it and we just shot straight up from on this candle. So here, right, this is maybe a little risk because we're looking at $10. So it is a little more than we are expecting, but that's going to be trade number one. It's a little bit more risk than we're anticipating. However, we can fill the gap. The market does that 80% of the time. It does fill the gap. Can we get trick, trapped, frustrated? Maybe. If that's the case, that's fine. We'll take our $10 loss. We'll take our $300 loss, right? Or $600 loss if we go with 60 shares. So maybe we do 30 shares. So that's going to be, now that I'm thinking about it, it's a little bit more risk. We're going to cut down our shares. So that's what I'm going to do tomorrow is I'm going to cut it down. If we gap up and we come into 30, into here, I'm going to cut it to 30 in case, because we could have that double bottom. I'm humbled and I'm experienced and I know we could do that. So I'm going to wait to see if maybe we come back and retest this 317, 310 area. If we come back down here, I will buy it. And then if we close below on a 15-minute hourly basis, that'll be my stop loss. And then here, if we close below here on a 5-10 minute hourly basis, that will be my stop loss. If we gap down and we have a breakdown candle, because we're in a bearish, there might be some still weak hands in this market, right? So if we do have a breakdown candle, $5 to $7, I will short it for $4 profit. I will short it. If I get a breakdown candle similar to this, I will use the high of that candle, like here, right? For instance, as an example, and if we start closing above it, I'll close my position. But I'm going to be looking for a $4 move, $3 to $4 move on 60 shares. If the risk is above that 3%, if I'm risking $10, I'm going to drop it down to 30. So that's the plan for tomorrow. We will be looking to buy because we've got slammed. There's going to be short covering, and I think there's gaps to be filled here. Two big gaps in a row. It's a strong downtrend, so I'm not going to put my 100% bull hat on, but that's the strategy. So hopefully you learned something. Thank you for watching. Let's see what happens tomorrow. I provided you that strategy. That's up to you to decide what to do with it. Again, it's not financial advice. I'm just letting you what I'm doing, and then we'll revisit what actually happened tomorrow. Thank you for watching. See ya.